Good afternoon. This is Tom Alexander. It is Sunday, April 30th, and it is 2:52 p.m. in beautiful Charleston, South Carolina today. This is the video addendum to the written report that I send out to all of those that have requested it. It's free. If you are finding me on YouTube and not through that report that includes this link, and you would like to receive the free report that I send out every week, please send me an email to tom@alexandertrading.com. I will happily put you on the list and you'll get all my free stuff. Also, if you find value in this, I would very much appreciate if you would subscribe to the channel, like it, make comments. I will answer all comments. I appreciate your being here and your attention. Okay, here's the bottom line. The markets look bullish. That's the bottom line. Let's go through. I'll show you some charts. Okay, what you're seeing here are the four primary U.S. trading indices, the SPX, the NDX, the Dow, and of course, Mr. Russell, the Russell 2000. And we are bumping up against critical levels, critical intermediate to long-term key reference areas in the SPX, NDX, Dow. The Russell is at a midpoint between critical levels. Let's start with the Russell, because I think the Russell is maybe the key to the entire intermediate to long-term market. And I think the Russell may be the key to whether or not we are in a bear or a bull market. If we are in a bull market, the Russell is soon going to catch up to the others. And in that instance, let me get rid of this, a little bit confusing. I just want to show you. Here we go. This is what I want. Okay, so from the close on Friday to this high in, what is this, late March, early April? It's about 2.38%. And you can see this is an important downside level. Now, this is sort of a double bottom last Wednesday and Thursday's low. And that low is going to be important in all four of the indices, and I'll talk more about that. Well, let me just give you the bottom line. The market is bullish as long as all four of the indices do not close below this low. Now, I have it highlighted in the written report, in the charts, and you can also view that on the website at www.alexandertrading.com. Just go to weekly reports and you'll see it. But I think you've based on information in hand, as I am recording this on Sunday afternoon before Globex opens, you have to be positive about this market. The charts look very positive. End of story. I forget the exogenous narrative. I'm a price-based trader. I trade auction market concepts, auction market principles, and regardless of all the exogenous noise out there, in good grief, it's as noisy a time as I have seen it in my 38 years of trading. If you just look at the price action, you can't come to any other conclusion except that it is positive and net bullish at this point in time. What would change that is a close by all four of the indices below the last Thursday, Wednesday low, depending on the day in which that particular index made its low. They're very close together, regardless of whether it's Wednesday or Thursday. So that's the bottom line here. So let's just take a hypothetical example. Let's say it's not such a bullish scenario. You could still, the Russell could once again trade all the way up into this very critical area, and it would rally 2.38% without breaking through. Now, if we were to have a rally in similar magnitude in the S&P, we'd be looking at something around 2,700, which puts you in the neighborhood of the August high. So we could go really close to 4,300 in the S&P, depending on how you get there and all this other stuff. And it's you still don't know if we're in a bull or bear market. Now, I do think that short term, it looks to me like we are at least going to continue to trade higher into next week. Now, we have the Fed meeting on Wednesday. Obviously, that can turn things upside down. But from a price action perspective, again, this is last Wednesday's low. If all four of the indices close below last Wednesday's low, an intermediate to long, probably intermediate, let's just use intermediate term, top is likely in place. Now, if we get some sort of chop and churn next week, in this general area, that's not going to be a big surprise either. But as long as this low holds, this is a big buying tail that formed last Wednesday. We had the ramp up, follow through on Thursday. So the market looks net positive. You can't, I have a really hard time stretching to make a bearish case here. The Dow is at a critical upper key reference area. You can see it has all this chop and churn and previous volume on the horizontal scale. And it does not look as clear as the SPX or the NDX, but the SPX NDX rally, the Dow is going to rally. Let's look at the NDX. The NDX is already above any objective quote unquote resistance. I don't use magic numbers of resistance. I use previous trade. I use actual market data. I use actual trade activity between the buyers and sellers, because that is what is most important. And I think if you use that over time, you will find it's far more accurate than trying to use all the magic numbers that are floating around out there. So the bottom line here is that from an auction market perspective, the NDX is in an elevator shaft that extends all the way up to the August spike high. Now, does that mean it has to go there? No, it doesn't. It just means that there is nothing on the chart that suggests, quote unquote, impending strong resistance. And again, you've had the NDX showing incredible relative strength, and it continues to do so. And this is this last Tuesday's low? It might be. But you get the point about all of these actually it's last week's lows. Let's just make it simple. Last week's lows could have been on Wednesday, could have been on Thursday, depending on the index you're looking at. Now, could the NDX go into a chop and churn between now and next Wednesday or Thursday because of this Fed thing? Absolutely. But at the moment, based on information at hand, all four of the indices have from a chart perspective, a bullish tenor. Okay, let's look at the technical situation. Is there anything there that's bearish? The short answer is no. There is nothing here that is bearish. You have the 10-day and the 5-day moving average of NYSE advancing issues starting to turn higher. Now, these are moving averages, so they're going to move slowly, but they are pointing in the right direction. You also have consecutive up days in breadth. Last week, I mentioned that one of the things that had to happen was for breadth to break out of this incredibly narrow range that we had. And the market gave a really, really nice head fake last Tuesday with a minor follow through on Wednesday and then an immediate ramp higher. And so we had both the downdraft in breadth and an expansion in breadth. Now, if the market is going to reach up into that 4,300 level, what you should see is persistently strong breadth. It doesn't have to be ripping strong, but it should be positive. It should be persistently positive. And anytime it dips to around even during the day, that should be a low under a bullish assumption. And you can see here's the 4,200 level. It's so close. I would just be shocked if for nothing more than algorithmic mechanical reasons, this level isn't run. And then you're so close to 4,300. 4,300 will be an interesting area if we get there. But let's not get ahead of things here. Okay, let's look at the other technical information that I pay attention to, which is the VIX. VIX closed yesterday at its lowest level since 2021, since right here. So it closed right here, and and from this level, from the last time it closed around 1578, it went 4% higher before you had any sort of reaction. This doesn't necessarily mean this is going to happen. I just show this to point out that just because VIX is low doesn't mean the market is an impending peril. As a matter of fact, if we are in a bull market, the trips back above 20 are going to be rare and far and few in between. And just like I said last week, I can make a very bullish case for VIX. I can make a very bearish case for this. Price action will be the determinant. Right now, price action looks very positive. So as a friend of mine likes to say, all will be revealed. All will be revealed next week. You guys have a wonderful rest of your weekend. I'll keep you updated.